Hello, and welcome to another episode of the US Market Open with Rufas Kamau. That's my name, market analyst at FX Pesa. So this is the 10th episode, and our main focus is always the same. We want to try to be able to understand what's happening in the current financial markets. We want to know what is majorly affecting the markets, what is affecting the major currency pairs, the major indices, that is American indices. We also look at a couple of commodities, and once we are done with these, we look at the key or the important price levels that may be important for entries, exits, stop loss, and so on. And once we understand these, hopefully we get to deliver value to you guys. So before I proceed, I would like to mention that this particular session is not investment advice. It's purely educational to help you grab the concepts, the ideas, and use them in your own analysis to determine whether it's the right information for you or whether to participate in the financial markets. So that being mentioned, I would like to begin by doing a mic test. So if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. So hi Kaya, and welcome to the session. Thank you for your response. I always appreciate when you guys respond and engage in these sessions. So let's begin with the most important thing today. We will look at the economic calendar, see the set of news that have happened and what we are expecting to happen in the near future. So today being Tuesday, we'll be looking at the calendar. So I'm hoping everyone can see these. So here's the economic calendar, and here is what has been happening since the opening of the week. As you can see, no major participation in the market. Bank holiday yesterday, that is on Monday. New Zealand Services Index relatively improving from 54.4 to 58.6. Foreign direct investment year to date in China dropping from 17.3 to 16.4. Then there was a major news from the Reserve Bank of New Zealand. There was a speech from the Governor Adrian Orr. Then from there, relatively silent market through to the end of Monday. So today, very early in the morning, there was a Japanese national core CPI, which improved from 2.4% to 2.8%. Japan has been relatively struggling with inflation. So having experienced negative inflation or what we call deflation for quite a period of time, majority of the monetary policy decisions have been focused on improving inflation. So seeing the inflation rise from a couple of months ago at 2.4%, 2.3%, then 2.4%, and now we are looking at 2.8%. And this is without the food and energy prices. Then for them, it's a move in the right direction. So they are clearly approaching their targets of having higher inflation, which is expected to stimulate economic growth. So later, there was a monetary policy meeting minutes. This is from the Reserve Bank of Australia. And then from then, during the London session, we had the trade balance in Swiss franc. Then the German producer price index, PPI, which came in positive at 7.9%. And then as we progress later in the day, the most important news for the day has been the Canadian CPI month over month. As you can see, it came out negative, meaning that the inflation is cooling down in Canada from a gain of 0.1% in the previous month to a cooling down effect of negative 0.3% compared to the previous month. So when you look at the common CPI year over year from 6% the previous month, now we have 5.7%. Same case to median from 4.9 to 4.8%. Trim CPI, say a similar contraction. And also we have the building permits in the US, and in this case, you can see housing is pulling down in the US, having seen building permits at 1.69 million in the previous month, dropping to 1.52 million in the current, in August, in this case. So housing starts, number of new constructions that started within the last month, from 1.4 million up to 1.58 million. So this is not major news currently affecting the markets. So the biggest worry or the biggest concerns for a majority of the investors in the market is about the interest rates in the US. So we know that the US has been raising interest rates since the beginning of the year. And this aggressive hike can also be described as a quantitative tightening. And this has an effect of strengthening the dollar. So overall, the dollar has been strengthening, and a further rate hike is expected to strengthen the dollar further. And this is expected to happen tomorrow at exactly 9 p.m. So a lot of investors in the market right now are majorly focused on the FOMC economic projections, the FOMC statement, and also the federal funds rate. So in the previous hike, they moved interest rates to 2.5% with a 75 basis points hike. And now we're expecting another 75 basis points hike to get the interest rates to 3.25%, which is expected to move in the right direction towards controlling inflation, but at the same time, making things very expensive. So that is, it will first of all make the dollar very expensive. So for especially us, the emerging and frontier economies, we'll be having a lot of challenges since the majority of our debt is denominated in dollars. So when you focus on the US economy, by raising interest rates, the cost of finance will be a little bit higher. And by being higher, it means that people will be spending more money towards honoring their credit card debt, mortgages, and so on. So there will be less money in circulation, which basically implies a much stronger dollar. So immediately after the vote, which will be announced at 9 p.m., we'll be seeing an FOMC press conference at 9:30 p.m. And this could cause volatility as it will be focused on the near-term outlook of the US economy. So that being mentioned, it's time to jump right in. But before we jump, there's also more news expected in the week. One, there will be monetary policy statement in Japan, followed by Bank of Japan policy rate, which is expected to be maintained at negative 0.1%. Then core CPI in Japan, this is expected to increase from 1.8% to 1.9%. There will be a press conference and also major policy shift in Switzerland. So this is big news, especially if you are a CHF trader. So we know that Switzerland has been one of the most notorious economies in maintaining negative interest rates. So there's that potential that they could change this particular policy and move towards positive interest rates. And this is a move in the direction of controlling the rising inflation. So currently, we have a policy rate of negative 0.25%, and this could move to 0.50%. And this would represent a 75 basis points hike by the Swiss National Bank, or what we call the SNB. So later on, a press conference at 11 a.m. So that day is also expected to be very volatile for Japanese yen, the Swiss franc, and also the pound. So inflation is a big thing currently affecting the major economies as well as smaller economies. So still at 2 p.m., and this will be on Thursday, we'll be looking at the Monetary Policy Committee of the UK. MPC will be doing bank rate votes to vote on whether to change interest rates, maintain or hike. Then monetary policy summary later at the same time, then the official bank rate. So as you can see, we are expecting the Bank of England to hike interest rates by 50 basis points, moving the interest rates from 1.75% to 2.25%. So a big volatile week, especially beginning from tomorrow. So we'll be seeing out of volatility, especially from the US dollar. Then on Thursday, out of volatility from Japanese yen, the Swiss franc, and also the UK pound. So as we move further down the week, the news get slightly weaker. So we'll be looking at unemployment claims in the US. More so further down the line, we'll be looking at the economic data from the Eurozone, that is the flash services PMI, as well as a flash manufacturing PMI. Later on, same economic data or similar economic data from the UK, and also Canadian retail sales. So Canadian retail sales on Friday, then the US economic data, flash services PMI, and also manufacturing PMI, before we end the week with a speech from Fed Chair Jerome Powell, and these will be happening at 9 p.m. on Friday. So there's that potential that the markets could be extremely volatile from tomorrow going through towards the end of the week. So be prepared for a lot of volatility, which basically represents a lot of movements that could happen in the market. And this volatility could create trading opportunities, which you can definitely take advantage of when you understand what you are doing in the markets. So that being mentioned, I think it's time we look at a couple of assets and see the direction that they are taking. So as we progress, if you have any questions or any suggestions that you would like us to focus on, feel free to type those in the live chat section, and I'll be responding to them right away. So hello, George, and welcome to the session. Hello, Ramsey. Welcome to the session. So first, the very first chart that you see here is one of our newest products at FXPesa, and this is crypto CFDs. So when you talk of CFDs, they are contracts for difference that you're able to participate in this market without actually owning the asset. So if you're a fan of trading CFDs, then you have the ability to gain exposure in cryptocurrencies, right, from Bitcoin, Ethereum, among other cryptocurrencies. So in this CFD, it's pretty simple. You don't deposit or withdraw crypto. You just deposit money in your trading account the same way you do, and then you speculate on the exchange rate of this currency against the dollar. So if it's Bitcoin, as you can see, it has been on a bearish momentum. And as you can see, this is the 15-minute chart. So if you go to the 1-hour chart, you can see the sharp drop that happens last week. So this is when the US announced the CPI. So after announcing the CPI, there was a very sharp drop, followed by some consolidation for a while before the market continued the momentum. And yesterday, it was quite volatile as we had a sharp drop followed by a reversal. And today, it seems like the original trend is continuing. So you can see the continuation of the momentum of Bitcoin, which basically implies that Bitcoin could continue moving down lower. So if we were to zoom out here, you'd notice that there is some form of ceiling that is shaping itself here. So the ceiling is basically a resistance level right from this point here. So the following day, the market is unable to break this level. This day, particularly, it did not test that level. Went straight down yesterday and then all the way up to resistance. And since then, you can see the market continuing to press down lower. So it seems like Bitcoin is consistently pushing lower. And this is in correlation with other risk assets, such as the S&P 500, the Dow Jones, and the NASDAQ. So I'm expecting some further bearish momentum as we proceed with the New York Open, perhaps the market pushing down lower before we see the decision tomorrow, and that will be about US interest rates. So that being mentioned, it's a similar thing as with Ethereum. So with Ethereum, this was the sharp drop. Then you can see even after the merge being successful, the market moved sideways for a while before moving further down, and then some further downside momentum. Yesterday, it opened with a gap downwards, kept pushing down, and then pulled back up. And today, it seems like the market is looking to continue along the same direction. So this seems like a nice potential target. And this is yesterday's low, especially if the New Yorkers decide to continue selling of this market and push the prices down. So that's it with the crypto. Now we look at a couple of currencies. I'll be looking at the major currencies in the market right now. So let's start with the Euro USD. So the Euro USD clearly on a bearish momentum. So if I start with a bigger time frame, this is the daily chart, then it's very clear that the market has been consistently moving downwards. So a key price level to notice is the parity level. And parity level basically implies the price level at which 1 euro is trading at 1 to the dollar. So I just want to mark this line at parity level so that you can see the interactions between the euro and the dollar at parity. So just want to move. Sorry. So there is the parity. So it has been acting as a major support and also sometimes as a major resistance level. So since the market dropped all the way down, you can see that there has been a lot of activity happening around the parity level. So the trend line, and this is on the daily chart, seems to be consistently moving downwards. So now that you have that perspective, if you move to a smaller time frame, and in this case, the 4-hour chart, then you'll notice that from this swing, the market went all the way up and then down, formed a lower low, and also this was a lower high before moving up, forming a lower high, and now the market has been unable to form a lower low. So what we are seeing here is a trend that is seemingly starting to weaken. So from this bottom here, remember, this was happening at parity level. Notice my blue line here representing parity level. So since then, you can see that the trend line is no longer following the original direction here, but now it's getting a little bit stronger, meaning that there is some form of strength from the euro against the dollar, but it has not been able to break the upper band or the resistance or the ceiling here. So with that in mind, then it makes a lot of sense to observe price action and also the fundamentals in the market before making a trading decision. So one key thing to notice is that the market is almost trading sideways. So if I was to pull backwards, you will notice there was this period, the market was going up. This is quite clear for everyone. Then it changes direction, moves downwards slightly for a period of time, and then upwards. So some pretty cool swings happening around here. So upwards, downwards, and then it breaks towards the upper side. Goes all the way up to the upper trend line, retests the area, drops sharply after the news, and now it has been trading in what looks like a flag. So if you ignore all the other history, and now we understand the price action and what has been happening, after getting to the bottom here, struggles a lot to get to the upper trend line, drops back to the lower trend line before eventually bouncing strongly on the lower trend line, going straight to the upper trend line, down, doesn't get to the lower trend line, and then moves sideways. Then it basically screams that something is about to happen and we are in a consolidation. So the current consolidation here at the onset basically looked like a flag, but now if you look at the swings, they are getting bigger and bigger, clearly indicating a pattern that looks like a loudspeaker. So it's more or less like a horn or a loudspeaker, and it's following these two particular trend lines. So one on this side and the other one on this side. So the upper one is expanding to the upper side, the lower one is expanding to the lower side, and the market is just oscillating between the two lines. And this is on the 1-hour chart. So moves up and then down and then up, down, up, down, up, down. And now clearly you can see the recent movement. And this is from the rejection early in the morning here. The price is headed towards the lower trend line. So moving towards the end of the day, I expect the market to test the lower trend line. And of course, we know that the outcome is always binary, where the market could bounce from this area or break towards the lower side. So personally, I will be observing this area here, looking for a potential break of this lower trend line, or even a potential bounce from this lower trend line. So having in mind that you're expecting some major news, then the Euro USD could continue trading within these two trend lines. So there is that potential that the market will remain here, and then a breakout may happen after the news announcement, whether the market will strengthen or weaken. So potentially the market could, let's say, get to the lower trend line here. And then once it gets here, then potentially remain within the particular pattern. And this could have some in-between trading positions happening as we wait for the news tomorrow. So a current bounce from this area might be very interesting because you could expect the market to trade within this range up until the announcement of the news tomorrow. So that's it with the Euro USD. So if you move to Pound USD, similar thing, strong bearish momentum happening on the daily chart. So this is it, and this is on the daily chart. So movement strongly indicating the strength of the dollar. So the current bottom in Pound USD is basically a 40-year high. So for 40 years, the pound has never traded this weak against the US dollar. So having that in mind, if you look at the smaller time frame, that is the 4-hour time frame, the market was strongly moving upwards, forms a resistance here, goes back down and then up, retests the same resistance, and that is the price level of 1.22765. Then it engages in a very strong momentum that lasted a couple of weeks. This is 4 straight weeks, and the 5th week going down got to the lower trend line, bounced very well, rallied for about a week. And then last week, a sharp drop towards the support again. And this week, you can clearly see that the market is struggling to bounce off from that level. So from yesterday, a sharp drop and then a rise. And today, a lot of noise has been happening around here. Before we got to this particular session, that is the New York session, the market is now attempting to push further downwards. So clearly, the dollar is very strong and it's the one influencing the markets today. So if you compare Euro USD, last couple of candlesticks are strong, losing momentum against the dollar. Pound USD strongly losing momentum against the dollar today. So it's clear that the dollar is the one dominating the markets. So dollar strength can be felt in all US denominated pairs. So having in mind what we are focusing on and the potential of the interest rates influencing the markets, then a key price level would be the bottom that has just been tested twice here. So this bottom, 1.13534, seems pretty interesting to me, because if the market drops and gets to this level, then it might remain there as we approach the outcome of the news tomorrow. So as we approach the outcome of the interest rates decision tomorrow, then this seems like a nice target, especially if the pound continues rising to the dollar. So this would be a very nice drop here. So at the same time, if you are looking at the price on the alternative side, then the most recent high is also a key determinant. So seems like an area that was repeated before. You can see the couple of times that the market has bounced around the area. So 1.14605, and this is basically a range between the week's high and the week's low. So the week started yesterday on Monday. So this is the lowest price we have seen, and today is the highest price we have seen. So I expect the pound to be range bound up until the announcement of the news tomorrow, which could cause strong volatility, perhaps even such a strong momentum such as this one could be happening tomorrow, either the market breaking towards the lower side or even bouncing and jumping towards the upper side. As per now, the price action suggests some sideways momentum, and this could be determined by the resistance we saw today and the support that we saw yesterday. So as we proceed, as I always mention, if you have any questions, feel free to type them in the comment section. So hello, Boaz, and welcome to the session. So that's the pound USD for you. Of course, this being the key price level, if let's say you had a short selling position here today, then your stop loss is just above the blue line, and the target most probably will be just around the blue line on the lower side here. So the other major currency pair is the USD JPY. So this one has seen some strong momentum over the year, where the dollar has extremely gained against the yen, until it has caused a lot of political worries as well as economic worries in Japan, because weakening exchange rate is not something that you always appreciate. So these are bad thing for Japan. For US dollar, it's a good thing because it's strong against the dollar, the yen. But then it's causing some challenges in Japan, and there is that potential that Japan could intervene in the currency markets. So it's not just a potential early in the week. I believe this was over the weekend. There was a couple of speeches from the Ministry of Finance in Japan, basically mentioning that they might want to intervene to make sure that the currency doesn't lose too much. So it was a clear-cut trade in Japan, where on one hand, you have a very strong monetary policy, tightening monetary policy in the US. They reduced all the stimulus packages, so no more quantitative easing in the US. And after that, they started raising interest rates in January. So since then, we have seen the US consistently keep hiking interest rates up to the current level of 2.5%, and tomorrow we'll be expecting a further hike. So when you compare with the other side, Japan has been maintaining low interest rates at negative 0.1%, and at the same time, they are stimulating the economy by pumping more money or basically printing more JPY. So with this happening in the market, then we're expecting the wide divergence between the two central banks to lead to a much stronger USD JPY. So this is projected to rise to some level, perhaps even at 150 Japanese yen to $1. So these pullbacks have been pretty important for technical traders. So every time the yen has attempted to strengthen against the USD, then you basically squeeze in bullish positions. So any bullish positions after these pullbacks have been very fruitful. So from the 4-hour chart, you can see that the market has been trading in what looks like a triangle. So clearly, the momentum upwards has cooled down and hasn't been the same since this particular double top here. So you can see the double top here. The market hits a high here, then another high here, and hasn't been able to break that level again. So on the lower side, if you look at the trend line here, it seems like it's facing upwards. So the market is forming higher lows, but the highs are equal, basically indicating some form of ascending triangle. So in this particular trade setup, it's pretty important to observe the two trend lines because a break of the upper trend line will be very important, basically implying some further upside momentum. And also, if it's a break towards the lower side, then it basically implies that there is some form of temporary Japanese yen strength. So you can see from the 1-hour chart, the sharp drop for like 3 days. Then the market goes up, drop for 2 days, market goes up. Remember, this was during the CPI last week. Then the market cools down, and now it seems like the market is attempting to push up higher again. So using a smaller time frame, and now this is the 15 minutes chart, you can see there's some form of trend line cutting across this, basically representing the high that we saw here last week, followed by this on Friday and this on Monday. And it seems like that particular trend line has been broken today. So it's clearly indicative of a strengthening dollar. So the dollar strengthens, breaks this trend line, goes back to retest, and now pushes higher. So this is basically indicative of momentum towards the upper side. So this particular breakout has the potential to move the prices all the way up. Perhaps towards tomorrow, we'll be seeing the dollar trading somewhere around this resistance of 144.983. So a very interesting price point, especially when you consider that if you are to go for such a position, then the stop loss would go just below the previous low, perhaps somewhere around this area here. So this particular continuation has the potential to move all the way up and get to the upper trend line, especially if the dollar continues strengthening throughout the New York session today. So now you look at the USD Swiss franc. This one has been making some major swings. We know that the SNB, or the Swiss National Bank, made a surprise rate hike and is expected to hike interest rates higher. And this is expected on Thursday. So despite having a strong dollar, also the Swiss franc tends to be a very strong currency because it's gold backed. So gold backed currencies tend to be also stronger, and they have such a higher demand compared to other currencies. So another key thing to notice in this particular market is that the market was forming lower lows, but the most recent low is higher, indicating a particular shift in trend, where now the US dollar is strengthening against the Swiss franc. So on the lower side, on the upper side, you can notice that there was a trend line extending, let's say, through this. So it's a slight bearish momentum, but long swings. So the swings are very easy to monitor here. So if I was to do insert indicators and then we do a zigzag, then it would make a lot of sense to observe these one. So let's do a higher number. So instead of 12, we could do, let's say, 20. So we just draw a zigzag based on 20 candlesticks. So we can observe the big swing here, another swing here, swing, and so on. So clearly, lower highs, lower lows, but this most recent low is higher than the previous one. So now, if you focus on the short-term price movement, and this is on the 1-hour chart, then it screams some form of consolidation. So if you just focus on the highs are clearly forming a particular path along here. And now, if you focus on the lows, then they're also forming a particular path along here. And this is indicative of what we call a rising wedge. So the two trend lines seem to be approaching each other, meaning that this is some form of consolidation. And at some point, you'll be looking for a particular breakout. So the breakout could be on the upper side or the lower side. You never know, you just have to be observant. Just draw your trend line and then keep observing the price action along these two trend lines. So if the market happens to break one of them, then you know exactly where to squeeze in your position. So a very interesting area here. So a swing up, then swing down, swing up, swing down. The swing up seems to be stronger than the swing downs, but at some point we'll be expecting a breakout. So early in the morning, there was a pretty nice idea to go for a buy position here, targeting higher prices, but now the price has already moved. So the idea is to look for when price gets to the upper trend line or the lower trend line. So a drop towards this area would mark a very interesting trading area, or even a rise towards this area would mark an interesting area to look for a trading position. So now that we have covered some of the major currency pairs, it's time to look at a particular set of assets that we also follow. One of them, I will be starting with indices. So let's start with the US 500. So this is the S&P 500. So on the platform, it's written US 500, but we normally call it the S&P 500. So clearly, the index is on a bearish momentum. So we all know that this bearish momentum started at the beginning of the year here, bounced strongly here somewhere around the end of March, then another bounce here, rejecting the upper trend line and then pushing further down. So if you notice, after the sharp drop here, the market rallied for a week, found resistance and went back down. So since then, it's very clear that the market is headed towards the lower trend line. So the S&P 500 is clearly in a bear market, and we're expecting some further downside. So anytime the market has been pulling up in these particular areas, investors are always ready to come in and push the prices back down. So the most recent rally happened yesterday, where the S&P 500 was strengthening against the dollar, perhaps even to retest these areas here. So broke this area here, and then today you can see it's a complete reversal of yesterday's move. So we're expecting the S&P 500 to continue pushing down lower. Perhaps towards the announcement of the news, we'll be expecting the market to be trading around here. So very interesting perspective here, that every time the S&P rallies, then the idea is to look for short selling positions in the opposite direction. So if you look at the 15-minute chart and you look at what happened yesterday, market opened here, went down, and then all the way up, and then rallied all the way up, and then the candlesticks got really small. So this was more or less like the market cooling down, trying to identify the next set of direction. So since then, you can see a strong rejection here. This is on the 15-minute chart. After this, the market has been consistently going down for the rest of the day. And we expect the market to continue pushing down further. So with the strength of the dollar, which is having an opposite correlation with the indices, then the potential is that the S&P 500 could drop further down towards previous support, and that is yesterday's low. So on the flip side, if the market was to reverse direction, then this is the target, that is the previous high. Today's high is also the week's high. So there's that potential that the market could go back up to retest the same area. So the price could drop all the way here, and if it happens to flip around this area, then the target is on the upper side. So that being the S&P 500, it's a similar story when you go to the NASDAQ and also to the US Tech 100 or the NASDAQ 100. So from the 4-hour chart, similar thing. So don't need to draw this. It's the same thing, beginning of the year, end of March, and then recently, this was last month. You would notice the major correlation here that is very similar with the S&P 500. So having noticed that, then you'll notice that the most recent swing had a sharp drop, and then a pullback, then a further drop. Then yesterday, some strong momentum towards the upper side, which has been completely reversed today. So we are seeing the market now continue to push further down. And if you look at the price action for the week, then today's high is the week's high, that is this week's high. And yesterday's low is the week's low. So market having opened here, gone down and then up, and now today going down, then the potential is that if the dollar continues strengthening, then the market drops to this point. But then if it happens to flip at this point, then goes back to the previous, to the day's high. So $12,018 per share for the US Tech 100. And if it manages to drop down further, then $11,705 per share. So some pretty obvious price levels that could be very important in hitting an entry or using it as an exit or a target. So The US 30 also doing the same thing. So even if you go to the 4-hour chart, then you notice it's the same pretty story from this beginning of the year, end of March, then last month, bearish momentum, and then struggled with a drop, didn't quite get to support. So this is the drop, market goes down and then pulls back up, drops further down, and then yesterday's bullish momentum. Notice how it happened here. Market found resistance here and now has been since going down towards the lower side. So today's high marks the high of the week. Yesterday's low marks the low of the week. And now it seems like the market is headed further down towards yesterday's low, that is 30,483. But then if it manages to reverse, and then the target is 31,157. Two key price levels for this particular market that you just have to observe. So if you manage to capture these, then the next target would be 30,483. So those are the three major indices in the US. And having covered that, I'll be covering two on the assets. One, we'll be looking at the US oil, and the other one will be looking at gold. And once we're done with this, then I hope it will be a fruitful session for everyone. So this is US oil. So let's start with a higher time frame. This has been completely bearish for quite a period of time. So we have seen oil trading at a very high level this year, and this was at a price level of $126 per barrel. So since then, this was around February, March, when Russia invaded Ukraine. So the oil markets cooled off all the way down to $94 before running back up. So we saw another high here, and this was $120 per barrel. So since $120 per barrel, you can see the bearish momentum that has followed after that. And this is majorly attributed to the US releasing or tapping its national oil reserves, raising supply, which has pushed the prices down. So since then, you can see the continued momentum further down, where the oil prices have been weakening and weakening further. So every time the oil prices have attempted to go up, they have eventually gone further down. So as we always say, don't oppose the Fed. So if the government is trying to do something in the market, you're better off not opposing that particular approach in the market. So you may also notice that the bearish momentum here is weakening. So if you look at the most recent lows, they are no longer following the original trend. Now they are following a completely new trend line. So from this low to this low, and then this low and this low, it seems like the trend is weakening. That is the bearish trend. And now potentially we could start seeing some form of bullish momentum. So when you start seeing the trend weakening, it's only a sign that it could start strengthening at any time. So if you look at this, and let's say we remove the previous trend. So this is the previous trend. Then clearly you can see from this swing here, and then down, and then up, down, up, down, up, down. Then it's clear that the oil prices are on a bearish momentum, quite bearish, but not as previously. So the previous momentum was very, very strong. Now it's a little bit weak, and the market is struggling to go further down. However, if you look at the most recent swings towards the upper side, they did not last long all the way up to the upper trend line. So it seems like the dollar is still very strong and strengthening against oil too. So from the 1 hour chart, you can almost identify that there is some form or some level of resistance here. So happening between this high and also the high of last week. So this week, market opened here, went down and then up, and now the current candlestick indicates a very strong bearish momentum. So we could see some further downside here. The market headed back lower to support. So yesterday's low seems like a nice target, especially considering that we just broke out of a flag. So from the 15 minutes chart, this is how the flag looks like. So market bounces from here, raise strongly, exhausts the move, and then starts moving sideways. So the sideways momentum followed by some form of trend line here. And also on the lower side, it was kind of swinging around here. So a lot of momentum was happening along these two trend lines. So moves up, down, up, down, up, down. And now in the most recent price action, broke towards the lower side and seems to be accelerating further down. So clearly, the obvious target is yesterday's low, and this is around 81.693. So this represents a very, very strong breakout So the expectation is that the market continues pushing further down and eventually gets to this particular level here. And this could be a really nice trade, especially considering that this was a major resistance level, considering last week's price action. So this was a resistance on Friday, resistance on Monday, and also the resistance on Tuesday. So the breakout is quite significant and the price could move swiftly towards the lower side. Also, a key level to note is that this particular low here on Friday might be a stopping point. So the market doesn't have to head straight all the way down to this low here. Sometimes this could be an in-between move where the market changes direction and then goes back up. Or if it happens to break, then the movement straight down to yesterday's low. So you have to be aware of this particular bottom on a Friday. So lastly, the chart of gold. So where is that gold? Awesome. This is gold. Strong correlation with these risk assets. That is correlation with the S&P 500, the Nasdaq, the Dow Jones. And also oil seems to be moving in a similar manner with gold. So clearly, if you look at the price action of gold, then major resistance here happening last week on Friday, yesterday, and then today. So this was acting as resistance. Now the bottom here, this was Friday's bottom, yesterday's bottom, and now today's bottom could eventually push further down. So the current price action is indicating a strong bearish momentum and could continue break this level and continue pushing further down. So it's a clear sideways momentum on a very strong bearish trend. So as you can see, despite my too many lines on my chart, it's quite clear that the market is consistently going down. So strong bearish momentum, slight break here before the market goes back down. You can all see these drops and then breaks again, and then drops and then pushes up again. And now there seems to be some form of trend line happening here. So if I just remove all these lines, then we can remove all these accumulated buyers and identify that this high coincides with this high and this high, and the kind of new trend or the new environment is along this path. So the most recent price action of gold is finding resistance here, whereas if you look at the support, seems to be on a narrow kind of pattern somewhere along this path. So if we remove this and this, and then zoom on our chart, then this is what we are seeing in gold. Going down and then up and then down and then up and then down, then up. So the most recent momentum is not very convincing that gold is rising towards the upper trend line. So perhaps even some further downside towards the lower trend line yet again. So if this kind of continues, then the target is that the gold price continues pushing down, gets to the lower trend line somewhere around here. So our target could be somewhere around 1641 or something around that. So from a smaller time frame, that is the 1 hour chart, then our resistance has been repeated twice yesterday. Sorry, thrice. Friday high, yesterday's high, and today's high has held very well. This bottom has not held quite well, has not been retested. So potentially, if gold continues moving down, then there's that potential to break this level and head straight for 1654. So you have to be very aware of this. So potentially on the 1 hour chart, there's that potential momentum towards the 1654 price level. So thank you very much, guys. Thank you for your time and also your participation. I always appreciate when you join in these sessions, and hopefully you got some value from the presentation. So a good question. So are we able to live trade BTC USD on FX Pesa? Absolutely, but you have to be aware that this is a CFD product. So you will not be able to deposit or withdraw Bitcoin. You are trading a contract for difference, so you trade it the same way you trade other CFDs. So you deposit money in your account, that could be cash, shillings, or US dollars, and then you are able to trade Bitcoin against the US dollar. You'll be able to trade Ethereum and a couple of other cryptocurrencies. To be honest, there are so many that you can find in the platform, but I only recommend the top currencies in the market right now, and that would be just Bitcoin and Ethereum, and they both seem to be bearish. So potentially, if you can squeeze in some bearish positions and make some money for yourself, then that would be all and well for everyone. So thank you very much, guys. I hope to see you on the next session.